Alrighty, what is going on, everybody? Welcome into today's video. Today I'm going to be teaching you guys how to trade a continuation model using my AEM strategy. It's a little bit different. I don't think I've actually mentioned how exactly it works for free here, like on YouTube or on Instagram, but I have inside of the premium community. But now it's time that I show you guys how to take advantage of this, which is so OP. This now prioritizes win rate over risk to reward. It's super sick. And yeah, the win rate for this is absolutely insane. It's like buffed, like a buff version of the AEM strategy, okay? But it's like better, if you know what I mean. So yeah, so also, I'm sure you guys noticed the background's different. Your boy finally moved out and into my own place. So it's very bright. There's a huge window right here. It goes hella far back and up here. But yeah, I moved into a new place. I just got a dog too, a sweet little puppy named Rigby that I will be showing in the vlogs and stuff. I would have him come in here, but I'm trying to kennel train him, so he's kind of just like sleeping in his kennel. So dog is crazy. It's a way harder than I thought it would be, but I'm willing to take on the challenge. Anyways, those are my little life updates for now. I will be doing a complete new apartment tour. It's really sick and the balcony's cool. So yeah, I will be doing that in the future, but I need to get a couch first. We got a TV. We're sitting on lawn chairs. So without further ado, let's go ahead and get into today's video. Alright guys, so getting started with a continuation model, we first have to discuss what is a continuation model. So I'm sure most of you guys are used to trading the AEM, where you wait for a liquidity sweep or SMT or tap into a high time frame fair value gap, and then you wait for a reversal. Essentially, you're being very reactive to what price is doing. In this case, you were trying to find your draw on liquidity, and you were going to target the draw. How many times do you guys notice that you have the right idea on where the market's going, you just get stopped or you take the wrong opportunity? Okay, that in itself, we are going to take that and we are going to perfect it, and that is what is a continuation model. We're going to take a continuation to liquidity. We're not going to wait for liquidity to get swept first. We're going to take the trade to it. Okay. So right here, I'm sure you guys can see we have some external range liquidity. Looks like we got equal highs. So yeah, so this is a pretty valid area to look for. What I like to look for is when the market gets very close to a level. Write this down, guys. I want the market to get very close to a level and then reverse. So in this case, the market could have just ran and swept liquidity, but it did not. We came up and then we, dilly-dallied around. We sat there, but we didn't sweep the liquidity. We got very close. We edged it. Pause. All right. So there is one thing I do notice. I want to mark this out. We do have a data low right here at 8:30 a.m. This is a Thursday, maybe unemployment. But yeah, so this is a data low. Okay. So what you're going to do, you need to be paying very close attention to all of the pools of liquidity around you, okay? You need to find that one area that you know price is going to go to. In this case, I'm very confident in this. This is a very good draw on liquidity. It's a very prominent swing high, all right? So I need to find other pools of liquidity because you have to understand the market is going to be working in a way that it sweeps one pool of liquidity, aims for the next, then aims for the next, then aims for the next. It's like an endless cycle, okay? Right here, we have data low, okay? We also have these lows. I do want to mark these out, all right? I don't know if my webcam is blocking that, but just so you guys can see this is what it looks like, all right? We have all of these lows marked out and then the data low over here. Now, if you look at the time slot I'm at right now, it's 9:30 a.m. Very important, 9:30 a.m.'s candle usually goes to manipulate, okay? It runs a manipulation sequence, all right? So what we're going to do, we're going to see if we get any sort of sweep of liquidity, okay? I want to look right here, all right? We just ran this short-term buy-side liquidity right here. We swept liquidity and came back lower, all right? What am I looking for? I'm so confident on this up here. Remember what I said when it gets close to hitting a level but doesn't do it? What I'm going to do is I'm going to immediately look for fair value gaps as well. We have a 1 minute fair value gap right here. Let me fix up my thing. Okay, so we have a 1 minute fair value gap right here. Let's go check the 5 minute. Okay. Okay, on the 5 minute, we just have liquidity. We don't have any fair value gaps. What we're going to look for is a sweep of one of these lower, so a data low or these two down here, or a trade into this fair value gap, and then we're going to take an expansion towards this liquidity up here. This is the main objective of the market, okay? Bang. I want you to look at that real quick. Look how perfectly we just whipped. Let's go down to the 30 second, okay? Let's go down to the 15 second. All right, so sometimes what I like to do is I like to literally just go and along the second it trades into that, especially because it's right at market open with a stop loss at the low. Okay, you could do that. I'm going to wait for confirmation. I'm going to be honest, I don't remember what happens in this example, so this will be completely fresh information. Let's see. Okay, it runs this low. Okay, so in this case, you would have got a scalp. You wouldn't have gotten the full expansion. But let's see what happens if we wait for confirmation. With a sweep of this 9:30 a.m. candle, let's see if we can go to the 30 second. Okay. Now, I want to delete this fair value gap. It doesn't really matter anymore. We're going to look at this one. Well, we get an inverse of this. Bang, perfect, all right? Scuffed entry, but it's chill. We can do a stop loss under the fair value gap targeting this liquidity. Okay, so just to recap, what are we looking at currently? We just had a sweep of liquidity. Hold on, first of all, we edged the external range liquidity above us. We had a sweep of short-term liquidity here and an inverse to the upside. Okay, now this should work, bang. And this isn't exactly necessary, but I do want to show you guys this. If we drag a fib from the data low all the way up to this high right here, before this whole run happened, we can see we tapped right into 7.9 literally perfectly. So these are my fib settings if you guys want to copy these down. Tapped into it perfectly, okay? Very crucial. We're getting multiple confluences that are coming together and, you know, giving us the same direction. So we have good fib retracement. We have a good draw on liquidity, a good inverse. That was a very strong inverse on the 30 second. We also had that short-term liquidity sweep. Everything's lining up for bullish, and we have a target. We know where the market wants to go. So it's super crucial. This is the exact continuation model that you need to be using, because here's the thing. I trade AEM. This is part of AEM. You're just doing it on a different scale. So instead of looking for these like huge liquidity sweeps, instead of looking to short up here after this liquidity is swept, you're looking to like a long into it using a smaller objective. So here's a smaller objective. Obviously, this liquidity isn't as important as something like this liquidity down here, but you're looking for the short-term sweep for the long-term goal, and the long-term take profit. So that is the continuation model paired with the AEM. I have a full class on this inside of the premium community. Link in bio. We live trade 3 times a week and absolutely crush it. There's over 40 classes already posted. Super locked in community, tons of people getting payouts, and I really want to flex on my students. So here we go. Drake, first payout right here, bang. Then we have Omari cooking with like a 15K payout. All right, TJ, payout. Hey Sung, payout. Okay, payout. Oh, passing, sorry, passing. Damn, 5K passing, that's crazy. Payout. Funded, payout. Okay, and it just keeps going. This community is extremely locked in. Everybody's dedicated for their goals, and this is the exact community that I would have wanted when I first started trading in general. And I wish I had this community at the time, but I didn't. I had to learn all this myself. But now my job is to make it easier for you guys, so you guys can learn a lot more simplified version than how I had to learn. I had to go through all the ICT work that you guys don't have to go through, so I can make videos like this and the ones inside of the premium community to help you guys out. So there you guys have it. That is my continuation model video. I've got a dog to go tend to, so yeah, wish me luck. Hopefully bro did not take an accident while I was recording this video, but I will see you guys in the next video. Peace.